All right, well, thanks, Raleigh. It's my pleasure to step in at the last minute. Today, I'm going to be talking about some high probability breakfast, lunch, and dinner trades that you can make risking less than $100 with Nadex binary options. I'm going to give you a guided tour of the platform. I'm going to discuss 3 trading strategies, and I'm going to provide you with some information on some great resources that are free on Nadex. So let's get started. But first, there's a trading disclaimer. Trading binary options involves risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. And always remember that past performance is not necessarily indicative of future results. Okay, got that out of the way. A little bit about me. I'm a partner relationship manager with TradingPub. And what I'm responsible for doing is contacting experts, like many of the experts that are on today's Trade-A-Thon, and matching them to projects that we're doing at TradingPub. When I first came on board at TradingPub, my first assignment was Nadex, and I had absolutely no idea what it was. So I opened up a demo account, and I got into it, and I really, really liked it. And it just suits my personality. And from that, I've done a lot of writing on Nadex. I'm author of a couple of blogs. One's called the Probability Report, which is a monthly newsletter of Nadex educational activity, events, webinars, also links to articles and other information that can help people trade with Nadex. I also have a personal blog called The Inquisitive Trader, where I break down trades and discuss the trading rules for a particular Nadex strategy, and then I dissect the trade and basically detail how the trade played out, what I saw, and where I entered, where I exited, and how the trade ultimately played out, whether it won or whether it lost according to my rules. So I'm pretty busy with Nadex, but I'm also busy working with a lot of other projects at TradingPub. So let's get right into Nadex and what binary options are. Binary options can be called yes or no trades. You're either right or you're wrong. So you're not counting pips, you're not setting stop losses, you're not doing a lot of the things that traditional traders do. Now with Nadex is you want to have an educated opinion on the direction of the market relative to a strike price within a defined period of time. That's all you're doing. And that defined period of time is a time period of your choosing. Each trade has a maximum value of $100 per contract traded. That means the absolute most you can win or lose is $100 per contract. And when you place an order with Nadex, you always know what your maximum risk and maximum reward are before you place your trade. So what you're doing, once again, is making a decision about the likely direction of a major index, commodity, or forex pair relative to a strike price that Nadex provides within a defined time frame of your choosing. And as long as that trade is active within the defined time period, you cannot get stopped out. The trade is live, so if the market whips up and it whips down, you're not taken out. What really matters is where the contract expires at expiration, where the price expires at the expiration that you chose. You can hold on to your trade until expiration, or you could exit your trade early and take profit or minimize loss. So let's go through an example of how binary options work. Let's say at 12 o'clock noon today, the current price of gold is $1,254 and it's climbing. All of your indicators are telling you that gold is on an uptrend, and you have a high probability strategy for trading gold futures. You believe that gold will not go down in price by 1:30 p.m. when the markets close. Rather, you think it's going to be $1,254 or higher. So you pull up Nadex and you take a look at their strike prices, and you see a strike price that you like at $1,250 with a 1:30 expiration when the gold market closes. When you do that, since the price was already at $1,254 and climbing, that is called an in-the-money order. you're already good, and if you believe the market's going to continue on going north, the marketplace might agree with you and determine that there's a 70% chance that that's going to happen. And if the marketplace determines that, then what you're going to do is you're going to risk $70 per contract traded to make a $30 profit on this high probability trade. So you're risking more to make less, but the market's already at 1254. You've determined it's going north, and you are buying the market from 1250. Conversely, if you feel that gold is going to do a reversal and settle below 1250 at 1:30 p.m., you could decide that you want to sell that market, and since the price is already, and you sell at 1250, you now have an out-of-the-money trade. The marketplace doesn't agree with you because the price is above 1250, and they're going to determine that there's a 30% chance that's going to happen. In this case, you would risk $30 to make $70 on a lower probability trade, and you would do that probably if you had some strong indicators or a strategy that suggested that a reversal was imminent. Okay, so who is Nadex? Nadex is a North American derivatives exchange. They are headquartered in Chicago, and they are a wholly owned subsidiary of the IG Group, which is a large trading company based in London and is listed on the FTSE 100 index. It is regulated by the CFTC. When you trade with Nadex, your orders are placed directly on the exchange. Your member funds are held in a segregated bank account in the United States, and there is full transparency on every trade that you place. Nadex does not take market positions in any of the instruments available. Nadex was previously available only to legal residents of the United States, Canada, Mexico, and U.S. territories. They are now opening in 49 countries as of the beginning of March, I believe. So when you go to Nadex.com, if you're an international member of this Trade-A-Thon, see if your country is included. Okay, so how to place a binary options trade. Everything starts with your opinion on the direction the market is headed. And you have several markets you can choose from. You can choose from popular Forex pairs, stock indices, and then what you want to do is select the asset you want to trade and select the expiration that you want. And that's really a function of your trading style. Nadex offers weekly expirations that close at the close of business on Friday. They have daily expirations, which are close of business each day. You have expirations on an hourly basis. They even have 20-minute and 5-minute binary options. The 5-minute binary option, that's a really short contract. It's a very fast-moving trade. So it's really a function of your personality and how you like to trade. Then you want to determine if you want to buy or sell a particular proposition. You select the number of contracts you want to trade. You determine the price that you want to pay for that contract, and your order is placed directly on the exchange. You are not working through a broker. You can close your position out early, or you can let your binary option trade ride until expiration. So, what does it cost to get involved with Nadex? You can open up a 2-week demo account for free, and I'll show you where to find that information. The minimum funding for a live Nadex account is only $100. So you can get into Nadex and place one trade, and you could extend your out to a year, continue to practice, and then fund your account according to your risk-reward preferences. You're not dealing with brokers, but Nadex makes money by charging exchange fees, and those are 90 cents per contract per side. And the maximum exchange fee that can be charged per trade is $9 for 10 contracts. So if you trade 10 contracts successfully, the round-trip exchange fee for opening and closing the trade would be $18. If you trade 20 contracts, it's still $18. If you traded 50 contracts, it would still be an $18 round trip exchange fees. And here's probably the best thing. Sometimes trades don't work out, they expire out of the money, and you lose what you risked. If you have a trade that expires out of the money or unsuccessfully, you're going to be charged the execution fee for placing the trade, but you are not going to be charged the order settlement fee. So you're only charged 90 cents per contract on that unsuccessful trade at expiration versus a $1.80 round trip. And I'm not aware of many instruments that are that forgiving for a trade that's a loser. Okay, quick summary. Binary options are based on a simple yes or no proposition. You're either right and you collect money, or you're wrong and you lose what you risked. You have a limited trade risk reward is before you place a trade. You have multiple markets you can trade. You can trade indices, commodities, forex pairs, Bitcoin. You can even trade news events. You have spike protection. If a market is whippy, you will not be stopped out as long as the trade is live. And it's a regulated exchange. It's subject to oversight by the CFTC. Your funds are held in a segregated account, and it's easy to deposit and withdraw funds from Nadex. So now I'm going to exit this presentation briefly and take a look at Nadex and see what's going on. Okay, when you open up your Nadex demo account, this is what you're looking at. You're looking at a fully functional platform, and on the left side of the platform, you're going to see indices. Hang Seng, FTSE, DAX, Nikkei, S&P, NASDAQ, S&P 500, Russell 2K, and Dow. Those are the indices you can trade. With Forex, there are 9 or 10 pairs: Aussie yen, Aussie dollar, Euro pound, Euro yen, Euro dollar, and so on and so forth. And then finally, under commodities, you've got copper, corn, crude oil, gold, natural gas, soybeans, and silver. So a lot of popular instruments to trade from, and you may be trading those currently if you're a Forex or a futures trader. Okay, so in the middle you have a watch list, popular contracts that you're looking at, but I'm going to take a look right now at, I'm going to take a look at the Russell. In the Nadex, that's a small cap 2000. And I've got several options I can take a look at. I've got a 10 to 12 a.m. time period, which is going to expire about an hour from now. 9 to 11, which is just due to expire in about 5 minutes, and a daily available to me. So I'm going to go to the 10 to 12 time frame, and I'm going to pull up a chart. And wait for it to load. There we go. Okay, so this is a 5-minute chart on the Russell 2K. We can see that after the open of the market, it's been bearish, and in fact so bearish that it's almost off the chart for strike prices available. So for that reason, I'm not going to use this example. I'm going to move to something else really quick. I'm going to go to one of the currency pairs. I'm going to go to the pound dollar. And I'll choose, for the fun of it, a 3 p.m. expiration. It's a little trade I like to do every day if I like what I see off the London Open. Okay, here we go. So here's the pound dollar. You can add whatever indicators you want to. Right now I've got the 8 EMA, which is the T line, and the 3 EMA up here for indicators. But you can drop in the Ichimoku cloud if you like that particular indicator. MACD, RSI, stochastics. You can take a look at volume, Bollinger Bands, whatever indicators you like to trade with. There are a lot of them that are available that you can use on these charts to help you make decisions. So taking a look at this particular chart right now, the market is grinding down to 1.4740. So it's just sitting over there right now, and let's see if I can pull it up. So the question is right now where the market is, it's 11 o'clock Eastern time, where the market is right now, at this particular point, will the market at 3 o'clock be above or below this point? Who thinks above? Who thinks below? Just type in an A or B. Anyone? At 3 o'clock, be above or below this based upon what you're seeing. I've got below, below, above, below, above. There are more belows than there are aboves. Okay, so at this particular point, if I go all the way over to the right, there's a strike price available for Nadex that is at the money. And it's saying right now, if I wanted to sell this market, it's in agreement with you. It's the market to sell at this strike price is 44.50, which means you'd be risking 55.50 to make 44.50, and you can see it's going to move all over the place. However, if there's a large sentiment that the marketplace is going to be good, you can move up to the next strike price, and we could sell from this strike price. And this would be an in-the-money trade. Right now, it's saying if you want to sell from 1.4760, your risk would be $26, excuse me, $74 to make $26 profit. If you believe that the marketplace is going to continue to trend down, you might look at the 1.4720, which would be an out-of-the-money, trade at this level. And that would be risking $35 to make $65. So depending on where the market is, you have buyers and sellers that are engaging. You're dealing very much with a traditional auction mindset for trading. So the price ladder to the right helps you determine where buyers and sellers are, and you can make decisions about that. The rest of it is taking a look at your indicators. For the pound dollar, you want to take a look at economic news. What's the US dollar index doing? Whatever information you use if you trade currency pairs. And this same thing is going to play out with the major indices and every other instrument that's available on Nadex. You're making a decision about the direction of the market relative to a strike price within a defined period of your choosing. So just to take this a step further, let me just drag this chart. I'm going to move the chart to 15-minute chart. And I'm going to erase all the scribbly lines. Okay. This red vertical line is your expiration at 3 p.m. So market is relative to expirations. The MACD is crossed over into negative territory. Everything is on a 45-degree downward. You have a lot of information you can make decisions from looking on it. But basically what you're going to be saying, once you take a look at a strike price, whether it's here or here or here or down here, where is the market going to be when the market gets to that red line? And you can stay in the money and opt for a little safety, or you can risk less money and basically project that you believe that the market will be somewhere down here when it crosses, that line. If I could draw a straight line. Okay, I hope that makes sense. So that's just a quick overview of Nadex. If I've got some time toward the end, I'll go back and take a look at a couple of other things. But there are a number of opportunities that are available for in the money, at the money, and out of the money trading strategies. And there's some really good experts that talk to each one of those levels. So okay, so how do you get a 2-week, click on the link, tradingpub.com/demo. They'll give you access to a 2-week free demo with $25,000 in play money for Nadex. I'm going to be talking about 3 strategies, and you may want to try them if you want to and see how they work in demo. If you want to open up and fund a Nadex account for as little as $100, go to tradingpub.com/Nadex. And then if you go to tradingpub.com, we've got a library of really good technical information on how to trade Nadex, including several of my trade of the days that I publish and put up on TradingPub. So I have something called the Strudel strategy, deals with the German DAX market, and I'll be talking about that today. Sausage and sushi, that's a dinner strategy. And other strategies that I learned from other traders that I break down and the TradingPub site. When you download your Nadex demo, by the way, it's super, super easy. All you have to do is supply, let's wait for this to come on up, create a demo name, first name, last name, phone number, and email address, apply for demo, your account is launched. So it just doesn't get much easier than that. Called the Probability Report, which is a blog that lists upcoming educational events being hosted by Nadex. They're usually held every Monday and Thursday. I feature an article of the month and a webinar of the month, or a strategy of the month. So you got written text, you got videos, and a calendar of upcoming Nadex events like how to scalp with Nadex 5-minute binaries, advanced trading strategies, how to trade crude and natural gas with Nadex. Lots of good information that are available every week on how to trade Nadex. Okay. A little bit about my trading plan. And this is my personal trading plan. I trade a small account. It was originally funded. I have a daily trading goal. Without account balance, I have a daily trading goal of $50 in profits. I never risk more than 5% of my account balance on any trade. There's never more than 5% of my account balance in the market at any given time. And whenever I look at a new strategy, I test it at least 20 times in demo before I even go live or really talk about it much. And the final key to my trading plan, which is extremely simple, is the probability of success of a trade must be greater than the risk or reward that I'm applying to that trade. So if I'm going to risk $80 to make $20, I need to have an 85%, 90% or greater success rate with that strategy. And that has to be demonstrated. If I tested it 20 times in demo, I need to know that this trade, under the right circumstances, has a super high probability of success. If I risk 70, I want an 80% or greater success rate. 60, I want 70% or greater success rate. And if I risk 50 or less, I want a 60 or more % or greater success rate, and so on. Okay, when you open up an order, this is the Nadex order ticket. I have 2 tickets right here. One on the left is a market order. When you fill out a Nadex order ticket, and I'll probably take an order later on just to show you a live trade being taken. You have what the proposition was. In this case, it was the Germany 30 or the DAX, then 91.20 by 4 p.m. There's 2 hours and 40 minutes left in that trade, and the market is currently trading at 91.37. So it's above 91.20. Okay? The bid and the offer, the selling and the buying price are clearly listed. You click the button whether you want to buy or sell, and then you populate in the size window the number of contracts you want to trade. And under price, if you're buying it, it automatically populates what the current offer price is if you're buying. So once you have that information, if you're satisfied with the market order and you want to go live, it also shows in the lower part of the ticket what your maximum loss and what your maximum profit is going to be per contract. And then you just place your order. That's basically placing a market order. If you take the price that's populated in the price window and you click place order, whether you're buying or selling, you'll be in the market. Then you can also place a working order, and this is what I actually prefer doing. What I will do is I may agree on that proposition, but instead of risking $61 to make $38, I might flip the script with 2 hours and 40 minutes left in the trade, because a lot of things can happen. You know, the markets get whippy. So in this case, what I'm going to do is I'm going to amend the price in the price window, and I'm going to change that to 40. My maximum loss now becomes 40. My maximum profit now becomes 60. And I'll place that order. Since there is no current market for that working order, it's going to sit in a pending queue until the market reverses enough to fill my order. There is a chance that my order won't get filled. But the reason why I like placing working orders is because psychologically, I'm entering the market on my terms, not on the terms that someone else is trying to sell me. When you place a market order, if you're buying something that someone else is willing to sell. And personally, I like getting things on my terms, but that's just me. Okay, I'm going to be talking about breakfast, lunch, and dinner trades that you can place with Nadex. So we'll discuss what's on today's menu. We've got the Germany 30, I call it the strudel trade. It's between time. My lunchtime trade is between 11 to 1. It's called the lunchtime Caret trade. And finally, for dinner, I have the Euro-Yen sausage and sushi trade. And all of them are high probability trades, and they work great, especially if you work a 9-to-5 job and you can't be on the markets the way you'd like to be. So the strudel strategy. I want to thank Tom Busby from DTI for this particular observation. Tom's been trading since the 70s and 80s, and he is an expert on the German DAX market. And in one of his webinars way back in July, he made an observation that the 7 a.m. Eastern hourly bar or candlestick for the DAX market controls the direction of the 8 a.m. hourly bar. And when he said that, to me, that wasn't about futures trading as much as it was a very clear binary decision. And I got excited about it, and I back-tested the DAX market, and I found out over a 20-day period back when I first learned about this, 18 out of 20 days, what he said was exactly true. So I developed a strategy for trading the DAX market between 7 a.m. and 9 a.m., which is a time frame that is offered by Nadex. So what I do is I'm at my computer before 7 a.m. I check the economic calendar. I prefer investing.com, and I take a look and see what's going on in the marketplace. So today, I'm looking at any news that could affect the German market. There was some German news, trade balance, so I'm a little bit bullish, a little bit mixed. So call that a scratch. And also, that trade expires at 9 o'clock a.m., which also dealt with several reports coming out of the U.S. on jobless claims. Also want to keep an eye on that. So if there's a lot of economic news going into the middle of this trade, more often than not, I will sit on the sidelines until the marketplace digests that news. I want to check the daily, hourly, 15 and 5-minute charts on the DAX to see if I can see an up or down trend. 5-minute charts, I'll take a look at the T line, which is the 8 exponential moving average. I'll take a look at the 50-day simple moving average, 50-period simple moving average. I've got a stochastic oscillator say that's set at 12.33, and I'll take a quick look at the 5-minute Ichimoku cloud to give me some idea on where this market is likely moving. Then what I do is I choose the 7 a.m. to 9 a.m. Nadex time period, and I want to see whether, I'm not going to make a decision until I'm convinced that the 7 a.m. hourly candlestick is bullish or bearish, and that requires patience, because sometimes it'll be a little bit choppy, or it'll do a quick 5-minute head fake and reverse. I want to know, usually that can take a half hour, it can take 45 minutes into the first hourly candlestick. But once I'm convinced that it's bullish or bearish, that's when I make my move. That's the trigger. If it's bullish, then I want to buy that market from the first Nadex strike price below the opening 7 a.m. hourly candlestick price. So I'm going to buy from underneath the market, and if it's bearish, then I want to sell the market from the first strike price above the opening 7 a.m. hourly candlestick price. So I'm buying low, selling high. And my expiration is 9 a.m. So typically once the trade is placed, there's usually about an hour and a half, hour and 15 minutes left until expiration. Then on risk reward, you could take a market order. If you do that, it's almost always going to wind up being a in the money trade. So you could be risking $60 or $70 to be making $40 or $30. What I prefer to do personally is to stay patient. And depending on how fast that market is moving, I like to stick to the strike price that I agree on if I'm buying, the first strike price below the 7 a.m. hourly candlestick. I'll put in a working order and see if the market will come back and retrace and fill me. So, you know, I could risk $60, I could risk $50. My order may or may not get filled, but once again, I don't have to go for action. What I'm looking for is to get an order that's filled on my terms. And then if the market is really, really going in a strong up or downtrend, you may want to consider doing a Nadex spread trade. And my time won't allow me to get into spreads, but it's another way of trading Nadex that more closely mimics conventional trading. Okay, so here are 4 days of the strudel strategy. I'm going to move left to right. The little arrow points to a small bullish bar. So the 7 a.m. hourly candlestick, this is an hourly chart, was bullish. The 8 a.m. was also bullish. So the 7 a.m. opening price was never threatened. The 7 a.m. bar controlled the 8 a.m. bar. Next day, bearish. The 7 a.m. controlled the 8 a.m. bar. If you sold above the opening price, that trade is good all day. Next day, bullish again. And 7 a.m. is bullish, 8 a.m. is bullish. And then the final day, bearish, bearish. Those are four days consecutively where the 7 a.m. bar, hourly bar, controlled the 8 a.m. hourly bar. And if you back test this, and you can get a Nadex feed on a DAX feed on investing.com, or any chart. I mean, Thinkorswim doesn't have a DAX DAX feed, but you can go to Nadex, the Nadex charts, which I use for this strategy. You can go to investing.com, pull up the DAX chart, set it to hourly, and back test as far as you want to, and you'll find that more often than not, like the great majority of the time, the 7 a.m. hourly candlestick controls the 8 a.m. hourly candlestick. And even sometimes, if you notice, the 8 a.m. one dropped below the 7 a.m. opening price, remember that I'm finding the first Nadex strike price below. Sometimes there's enough slack that even if it visually looks like the 8 a.m. bar, like it was a loser, it actually can be a winner just because of the space between the 7 a.m. opening price and where the nearest Nadex strike price was. Okay, there's an exception to this rule, and that deals with really real sharp uptrends or downtrends. you never want to get in front of a falling knife. So in this market, here's the 4 a.m. candlestick, sharp bearish. 5 a.m. sharp bearish. 6 a.m. spinning top. The marketplace is moving and gapping below the T-line. And from my observation, the following the T-line as an indicator, the marketplace always comes back to the T-line. So it gaps away. The 7 a.m. hourly candlestick was bullish, but all it was doing was getting back to the T-line before the downtrend continued. Before the downtrend continued. So had I taken this strategy to the letter and bought off the 7 a.m. candlestick, I would have been taken out in the 8 o'clock hour. That would have been a loser. So you want to be aware of what the market is doing, and don't blindly trust the price action of this. And it doesn't happen that often. But if you see a steep downtrend or uptrend, you got to respect the trend. So I'm just going to play out a little Nadex trade here, and this is dealing with the strudel strategy. And I've got two vertical lines. There's a 7 a.m. and there's a 9 a.m. red line. That's the expiration. So this trade was bracketed within this little period right here. Let's pull something up here. Okay. So that's where the market started. And this was expiration. So 7 a.m. big giant bullish move. Okay, it moves that big. I'm going, wow. Can it come back? I don't know. The market just opened a 5-minute chart. So it goes all the way up. I'm thinking this is going to be bullish. From 5 o'clock to 6 o'clock, we're on a bullish trend. It moves all the way up off the chart and then starts to retrace. Down here, my rules are if it's bullish, here's the opening price right here. I'm going to buy from the first strike price below the opening price. So I placed a buy order risking 50 to make 50. Well, way up here, that's deep in the money. There's no way on earth I'm going to get filled. In fact, there might not even be a market for this strike price right now. So that's where I just decided to be patient. Once again, I want to engage the market on my terms. I don't have to get filled if I don't want to, but I don't want to take a bad trade. So the market comes back down, comes back down, comes back down. It closes down here just barely bullish. And then it moves up a little bit, and then it drops again. And as soon as the market came down here, my order risking 50 to make 50 gets filled. There is now a market for my working order. It drops down a little bit. I'm threatened. I'm threatened really big. In fact, I placed two orders here. I placed a backup order way down here, risking 80 to make 20 because I was deep in the money. That got threatened for a second, and the market shot back up. And by expiration, the market expired right here, which was above my buy orders. Both of these buy orders were good, and I had, three contracts listing 80. I had one contract risking 50, so that netted me $110 for that particular trade. And all of that happened within a 2-hour time period. So that's the strudel strategy. Okay, quick profit plan. This was done back in the summer of last year when I first found out about this. I started doing a demo on this. I tested this particular strategy 40 times in demo, and here were the results. The first 10-day period starting September 15th, I registered risking 50 to make 50. I had 8 wins and 2 losses. The next 10-day period, I had 9 wins and 1 loss. Every trade risking 50 to make 50. Third 10-day period, I had 2 losses, 2 no-fills, and 6 wins for a total of $200 profit in demo. And then finally, on the last period, I had 150 in losses versus 150 in win. No, I actually wound up $150. 3 losses, 6 wins, and 1 no-fill. So when you add it all up over 40 trades, which was 2 months of demo trading, all with the same rules. Each trade was taken from 7 to 9. I had 29 successful trades for $1,450, or a 72.5% win rate. 8 unsuccessful trades, which cost me $400. I had 3 no-fills for a net profit of $1,050. I assumed that I was starting this whole thing with a $500 opening balance. Add that profit to the opening balance. That takes you to $1,550, less $59.40 in exchange fees for a $1,490.60 net profit. That's a 200% return on a $500 opening balance with a 1-to-1 risk-reward ratio, and no trades were exited early. So this was between August and September. I can tell you in the start of this year, this strategy is working almost too good. The marketplace is tending, the 7 a.m. Bar is really controlling the 8 a.m. bar. I'm not seeing the retracement that I'm looking for to get a 50 risk to 50 reward trade. So I'm rethinking this a little bit, but I know that during the period, during the last quarter of last year, the end of the summer and all the way through December, this strategy had a very high success rate. It is still successful. I think it's a better strategy for Nadex spreads right now, given the volatility that's in the market, but it still works if you want to adjust your risk to reward. In summary, with this strategy in Nadex, you choose a 7 a.m. to 9 a.m. Time period. And if you're going to buy it, you buy it from the first strike price below the 7 a.m. hourly candlestick. If you're going to sell it, you're going to sell above the opening price, 7 a.m. hourly candlestick. And place an order that best suits your risk-reward criteria. And if the market is running away from you, consider placing a spread versus a binary trade. And that's pretty much it. Wait for your order to get filled. So that is the morning strudel trade. And I just need to check something. See where I am on time. Okay, I got 20 minutes left. This is good. The Caret trade. I'm going to thank Sean Jantz with the Binary Trade Group for this particular trade. And this is one that's done between 11 a.m. and 1 p.m. on the S&P 500, and basically what he observed is, you know, in the morning when the market's open, there's a lot of volatility. There's a big push into the market, and the marketplace will either, a lot of the time, the S&P 500 or the Russell will just grind its way upward very, very nicely. And going into the 11 o'clock to 1 p.m. Time frame, the volume drops out of the market. And when that happens, it's sort of like the lunchtime doldrums. A lot of traders don't like to trade during that period because there's not a lot of participation in the marketplace, and those indices lose their momentum, and it can create a caret. And a caret is that upside down V shape that's on your computer keyboard above the numeral 6. Marketplace will go up and then it'll come down. And what you want to do is you want to take advantage of that pattern and trade off of it. So this is a strategy that repeats itself a lot. Sometimes it's almost daily. And on Sean's website, which is Binary Trade Group, he also has a Facebook page where he details that strategy. He calls it, he diagrams it, and you can actually follow that strategy and watch it working if that setup is in play. Okay, so what we have here is a February 23rd Caret trade on the S&P 500. The vertical lines, once again, represent the 11 a.m. to to 1 a.m. time period. So here's the start of the trade, and here's where the trade is concluded. And you can see how the marketplace just went up, stopped, there's the Caret, and down. And the strategy is about selling above the reversal of the market and taking advantage of this pattern. So pretty much simple as that. Okay, so once again, I mentioned that Sean draws up all kinds of battle plans, and when this trade is starting to show himself, he actually does screenshots on Thinkorswim, which shows how the market is moving. He uses Keltner channels and Fisher transforms. This gray box is a value area box where it shows how the marketplace is sort of bouncing off value area high and moving back up north. The market is moving up through the top or bouncing off the top Keltner resistance channel. There's a reversal star candle in place. Lunchtime volume is fading, is declining going into this period. And the Fisher transformer is starting to move into overbought and giving some signals that a reversal is imminent. So this is information that he provides traders for his group, and it's really good information. Okay, so finally the market starts to make its little reversal. He goes, hey guys, it's turning bearish. Now there's a cluster of sell indicators on the Fisher transformer. Volume is definitely shooting down, and this particular blue line represents the expiration of that particular trade. So he's basically saying, if you want to get in on this thing, get in on it now. The reversal is there. There's a strong there's every reason to believe right now that the marketplace is not going to reverse and do something crazy like shoot up this way. It's on this particular trajectory. So once again, all this stuff is covered at the Binary Trade Group. They have a really good active group of traders in there, and really, once again, just to recap this trade, you want to watch the S&P 500, Russell 2K, or other U.S. indices. This can also work on the NASDAQ or the Dow into the 11 a.m. Eastern hour. You want to select the 11 to 1 a.m. time period that Nadex gives you. You want to see if volume is declining going into the lunch hour. And is the market grinding upward into 12 p.m.? Are the indicators and the oscillators showing that this particular market is getting into an overbought condition? And is the market developing a reversal pattern? Once you've confirmed that the market is reversing, you sell above it. Your average risk will be $70 to $80 per trade because this is an in-the-money trade. But, you know, once that thing goes down, it's a very, very predictable trade. Now, finally, I'm going to move to dinner time and talk about the sausage and sushi trade. And I want to thank Crystal Comer, who's the CEO of SlickTrade.net, for this strategy. And it takes advantage of the Euro-Yen Asian session in the evening. Depending on where you live in the United States, it's a really nice dinner or after dinner. It relies heavily on price action, and you really don't need indicators for this trade. If you know how to draw support and resistance line, that's all you need to know for placing this trade. It's a breakout trade. So what you want to do in this particular example is you want to, I've got a vertical line at the 6 a.m. Eastern time hour, and I've got a vertical line at 8 o'clock. And what you want to do is you want to take a look at this time period, and you want to draw support and resistance lines on 15-minute charts on the high of the 6 to 8 period and the low of the 6 to 8 period. And you want to draw those support and resistance lines on the candle bodies and not the wicks. So just the candle bodies, and you draw that. And then after that, you want to, this is a trade that expires at 11 o'clock, so it expires all the way out here. What you want to do is you want to box in support and resistance from 6 p.m. to 8 p.m. and then watch what happens with the market from 8 o'clock to 11 o'clock. If that resistance line, like in today, this example, is breached with a 15-minute candle, then what you want to do is you want to buy this market from the closest strike price below the resistance line. And if this market had come down, I'm going to extend the support line here. If this market had come down and breached this, then I would be a seller from the same strike price. So in this particular day, if resistance is breached, I'm buying from this strike price. If support is breached, I'm selling from this strike price. And with great amount of frequency, this trade works. I would say, I hate using percentages, but it's over 80%. So what you want to do, once again, is draw support and resistance and watch where the market travels. If a 15-minute candle breaches the resistance line, buy. If it breaches support, sell. And if the caveats to this trade is if the support and resistance is really, really, really skinny, I keep away from this trade. Let's say I just get rid of this bottom line. If it's really, really skinny, you know, a breach could be a head fake. It could come right back down. If there's economic news that's pending, I want to watch out for that because that can just, you know, tear up anything. And so those are the key things. I mean, you want to make sure there's a decent range pip-wise. You know, 20 pips is pretty good, but if it's like 9 pips, that's a really, really narrow range. It's too skinny for my appetite. So, but if you can find a nice range that you can work with and you test this in demo, this thing works great. And it has a high probability of success. It's an in-the-money trade most of the time. In talking with Crystal about this, to get filled, her average risk is $70 to make 30. I've been able to get 60 to make 40 on times, 50 to make 50, and one time I was actually able to risk 40 to make 60 on it. But on average, I'm just going to trust her research. She's been doing a lot longer than I am. And 70 to make 30 for a high probability trade isn't half bad. Okay, so reviewing the rules of the sausage and sushi trade. By the way, I call it sausage and sushi because the 6 a.m. to 8 p.m. Euro-Yen Asian session was just way too long for a strategy. Sausage and sushi is kind of fun, and it's a dinner time trade. Let's see, if you want to select the 11 p.m. daily expiration time frame on Nadex, and at 8 p.m. You want to draw the support and resistance lines between the 6 p.m. to 8 p.m. time frame. And you want to do it using regular candlesticks, not Heikin-Ashi candles or whatever. Just use regular candlesticks. You want to do it on 15-minute charts. You want to be aware of any economic news that occurs on the yen, which will happen usually somewhere between 6 and 8 p.m. Most of the economic news on the Asian session happens in that time period. So when you're drawing support and resistance, you see the news happening. Sometimes they have Japan releases minor economic reports closer to the 11 o'clock expiration time period, which you want to take into account. Okay, if you're selling with the sausage and sushi strategy, you're waiting for the marketplace to breach. And I want a hard breach. I don't want it just to go through it. I want a 15-minute candle to close and break through the support line. If it breaches that, then I'm going to sell from the first Nadex strike price above that support line. If I'm going to be buying, I'm waiting for a 15-minute candle to close convincingly above the resistance line. And I will buy from the first Nadex strike price below the resistance line. It's pretty simple, pretty straightforward. You always want to pay attention to trend direction on this strategy. And if it's going sideways or it's range bound, stay out of it. It's too much like gambling. If the range is too skinny, I don't think it's worth trading. But, you know, if you have a decent spread between 6 p.m. to 8 p.m. support and resistance, this is a great trade and it works with a high degree of consistency. And if you visit the slicktrade.net trading room, they follow this strategy every night. There's a couple other groups I know that have really gotten into trading sausage and sushi. So once again, there it is. You draw sausage and sushi. You identify the 6 p.m., 8 p.m. time frame. Draw support. Draw resistance. Look for the breach and buy from the first strike price. And if the marketplace goes the other way and it breaches support, you're going to sell from the first strike price above. And that is the sausage and sushi trade. And it just doesn't get much simpler. Okay, I've got 6 minutes left. Okay, I just want to follow up with a couple of things really quickly. My email is camw@tradingpub.com if you have any questions. And really what you want to do is you want to, the next step really is if any of this sings to you, then what you want to do is you want to go to tradingpub.com/demo and get the 2 week, and then after 2 weeks of trading strategies or your own futures of Forex strategies, and you find out that they're working for you, then you can go to tradingpub.com/Nadex, fund an account with a minimum of $100. And with that minimum of $100, I kind of recommend doing that, taking a trade and staying in demo until your account is adequately funded. So, and then once again, I promise that if I have time left, and it looks like we've got, a few minutes left, I'm going to go back to this account and I'll just take a look at that trade that was trending downwards. Everyone agreed it was going below, downwards. It still is. There's 3 hours and 19 minutes left in this particular trade. So if I wanted to sell right here, on sell at 1.4760, I'm just going to show how to pick up a ticket. It's showing me that I'm selling at 14760, that I've got expiration due in 3 hours and 19 minutes. The market is currently trading at 14741. If I sell this, it's going to be an in-the-money trade. So I'm going to be risking 73.50 to make 26.50. Okay. If I want to go in the market with that, boom, I'm in. Now it's showing me that I'm active. And right now, the market price, if I wanted to exit this trade, I'd be losing $2.25. The more this continues to grind down, the more this red thing is going to turn blue. It's going to show me that I'm accruing X amount of profit. If I think that I can ride this proposition safely to expiration, here's where we are. So I'm betting that the marketplace is going to stay below this horizontal line right here by 3 o'clock. If I do that, I can hold to expiration. Once this turns blue and I start accumulating profit, I can make a decision to take profit early. And if this marketplace started to reverse on me, I can also exit this trade early. And I'm going to exit this trade right now. just by clicking on it. All right, I have a pending on there. This trade will close out in a second on me. So I can get in and out of a trade if I see the market threaten me. I can take profit early, or I can let it ride to expiration. And with that being said, folks, I'm going to clean up my mess here and go to questions and answers. Can you discuss today's DAX chart on the first strategy?
Raleigh, great job on that. I took a note of some of the questions that came up while you were talking. One of the questions that is, do binary options brokers trade on Nadex? And let me handle that one, Cam. Nadex, once again, is the exchange. And as Cam had mentioned, when you sign up to Nadex, you are actually trading on the exchange and not through a broker. So yes, it is possible that you have actual brokers that are trading on the Nadex exchange, because once again, they can sign up and do that and open up an account to do so. But I just want to point through that you are not working through a broker. When you're working with Nadex, you are placing your orders directly on the exchange. As Cam also mentioned, the Nadex is regulated, and there are a number of binary option firms, around the world that have there's mixed opinion about them. And but more importantly, once again, none of these houses or brokerage firms are regulated, and that's one of the reasons why, once again, we're such a big promoter of Nadex. Also want to point out that initially, Nadex was only available to U.S. residents and North America, Canada, Mexico, etc. But Nadex is now available in 47 different countries, so they're really expanding their reach from that perspective. Cam, there's a question that came up, and I think it's more of a statement, need to add bonds instrument. I do know that many people that trade Nadex yeah, and Cam says full agreement. We provide information and input to the folks at Nadex with regard to new instruments to trade, and they are certainly open to taking those under considerations. Cam, there was a question somebody asked, does anybody do algorithmic trading with Nadex? Are you aware of anything like that, Cam?
Not that I'm aware of. But, that doesn't mean that it's not happening. There are a number of Nadex trading educators out there. Apex Investing Institute has a number of tools, but specifically algorithmic trading, not sure.
Okay. All right.
And let's see. Someone said, can I discuss today's DAX chart? Well, let's pull the DAX. Let's see. Germany 30. Doesn't matter what time frame I choose, because the 9 to 11 a.m. period has already expired. DAX chart was a winner today, if memory serves me right. And we want 15-minute charts. Let me just drag this over here. So 70. Good Lord, I wish I knew how to do it. It was right here in this time frame right here. The marketplace in the first hour was bullish. High in the first strike price below, which was down here somewhere. And the marketplace moved way up there. Today was a deep in the money trade. So you would have been risking $80 to make $20 if you had dexterity, because it was moving away fast. And once again, look how far this market has ground its way upwards. This would have been a great day on the DAX to take an Nadex spread, which is basically dealing with a box around the entire market. Good Lord, this is messy. You're dealing with a box around the entire market where every pip is worth $1, and you can just, per contract, and you can just ride it as far as you want to and take profit whenever you feel that your profit target has been reached. There's more risk and reward in that because the box could be 400 points, where every point is $1. Every pip below your strike price is risk. Every pip above your strike price to the ceiling, in this case, would be your reward. So, hey, listen, I'm getting the signal that I need to wrap it up. So, I hope this addresses your questions. Once again, my email address is camw@tradingpub.com. I hope you found this informative. And Michael, depending on where you live overseas, there's 49 countries that Nadex is now opened into. So you can find it on nadex.com to see if you qualify. Germany, yes.